Netflix is worth about $50 billion more than Disney at about $270 billion market cap. Disney has about a $220 billion market cap as I'm recording. But I think there's a pretty clear path for Disney actually beating Netflix in streaming. And the reason is Disney is going after a much bigger addressable market. Now, what I'm going to cover today doesn't even cover the experiences business, which is really the profit driver for Disney, generating almost $10 billion a year in operating income from parks and experiences. I'm going to put that aside for today. What I want to focus on is the content business and the distribution business with streaming. And that's really, I think, the future growth for Disney. And you may be surprised to hear that Disney's streaming business is already getting close to being as big as Netflix is. And if the company is successful in launching an over-the-top ESPN product in 2025, it could easily be much bigger than Netflix by the end of 2025. That may sound shocking, but I'm going to go through some of the numbers here today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. First, I want to just go over a quick comparison of the size of these two businesses. I'm going to focus just on Disney's streaming business. This is a look at Disney's most recent quarterly report, and the direct-to-consumer business is going to be Disney Plus and Hulu, $5.5 billion in revenue, up 15% from a year ago. This does not include ESPN Plus, which is not a real big business right now. It's not really bundled very well with Disney Plus and Hulu. So I'm going to kind of put that aside for now, although I think that will be a growth driver in the future. But look at the comparison of the size of this business, $5.5 billion to Netflix. Now, Netflix, much bigger user base at 260 million users. Disney Plus is a little over 100 million, but revenue is $8.8 billion and up just 12.5% from a year ago. Now, that was a pretty big surprise as they had a big increase, a 12.8% increase in the number of subscribers during the fourth quarter of 2023. But I think this just goes to show that as Disney Plus, Hulu not only increase prices, but also bundle a little bit better, there is a pretty clear path for them to grow to the point where they're going to generate as much, if not more, revenue than Netflix. There are some reasons for that. One is that I think Disney has much better tentpole content. So the identifiable shows and movies, particularly that families are going to sign up for and not be able to churn out of. So I think that's a really attractive position. And Netflix has really struggled with a lot of that. Now, the question for the future is profitability. Netflix, very profitable business, free cash flow in the most recent quarter, $1.6 billion. Disney is not anywhere near that. But if they get to $8.8 billion in revenue, so if they're able to both lower costs and increase revenue, I think they will have a pretty attractive business. But this isn't really where the company's growth is going to come from. The growth is going to come from two areas. One is advertising, and the other is sports. Let's talk about the sports piece first, because I think that's what's ultimately going to be the most important for Disney. Now, the sports segment for Disney is dominated by ESPN, and in particular, domestic ESPN or US ESPN. And you can see here that revenue in the most recent quarter was up 1%. This segment did move to an operating profit of $255 million. So doing a little bit better than it was a year ago. But I think the reason that sports is going to be important for Disney is the strategic positioning of ESPN, ABC, and then the ESPN over-the-top service, which is currently ESPN Plus. That will probably change in 2025 a little bit. But what that's going to allow Disney to do is have a must-have service for a lot of sports fans, tens of millions of people who would be willing to pay almost any price for access to the sports that they want to watch. Right now, that's products like ESPN. I mean, when ESPN goes off any cable bundle, it doesn't take very long for that to get back on the cable bundle, pretty much no matter the price, because there are so many people that want to watch the NFL or the NBA or college football. And so that's what sports is going to bring to the bundle of Disney Plus, Hulu, and ESPN. I think it's going to expand the pie and then also increase the price that they're going to be able to charge overall for that bundle. And some recent signings are going to be really important to that. This is the recent signing from just a couple of days ago that they're extending the college football playoff exclusive on ESPN through the 2031-2032 season. Now, when asked about streaming specifically, ESPN was pretty coy on what was included, but I think it's pretty clear that they're going to be able to include all of these extensions with an over-the-top streaming service. But I think this was what was really important in the announcement. The agreement is the second major college sports media rights extension in 2024, following an 8-year deal with the NCAA announced in January, which encompasses exclusive rights to 40 NCAA championship events. ESPN now has exclusive domestic rights to every college championship outside of men's basketball, so that'd be March Madness, and international rights to all major college championships. So if you are trying to build a global streaming service, a global sports streaming service, this is going to be the kind of asset that is going to be very valuable. It's going to be a tentpole on the sports side of things. So I think that is why this is really critical for Disney. And sports is not an area that Netflix really plays right now. I think this is where Disney can have a point of differentiation. So it's not only the movies and the content, the studios that are particularly on Disney Plus, but also now the sports where ESPN, ABC, and the ESPN streaming service are going to be able to combine to get some of the best sports assets in the world. We have seen that with college football. We have seen that with Monday Night Football. The next deal to come up in 2024 is going to be the NBA rights deal. I wouldn't be surprised if those three assets combine together under the Disney umbrella to provide massive upside, particularly on the streaming side of things. But there's more to it here, and I think that the other thing to think about is advertising. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Now, the other reason to like Disney's position in streaming over Netflix, especially given the valuation, is the advertising business. And this is just a recent deal that Disney signed with Google and the Trade Desk to provide access to Disney Plus and Hulu, which are now going to be combined into one app that's coming out of beta relatively soon. And ultimately, that will also include ESPN over the top. So there's going to be one application where advertisers are going to be able to go in and put ads onto all three of those streaming services. Now, Netflix has moved into the advertising business. I think they will probably be fairly successful with that long term. But what this does for Disney is it allows them to monetize for advertising not only on ABC and ESPN, their other cable networks, but also in the streaming business. And from what I have heard, Hulu in particular put Disney ahead of Netflix by a number of years from an advertising space. And this is an advertising company in general. So Netflix is just getting into this in the last year or so. Disney has been doing advertising for decades. So this is really going to be a point of differentiation, will likely improve the monetization on a per user basis for Disney, particularly in something like these sports tiers where you're going to want to have access at a relatively low price on a monthly basis. So I think it's easy to look at Disney's streaming business and look at the results in the past and say, hey, this is kind of a failure. The company's been losing money. The growth has really slowed down over the last few quarters. But if you look at where they are strategically and where the momentum is in the business, not only with the deals they're signing, but also with subscriptions and with pricing, I think Disney is in a very good position. And considering the fact that it is trading for a lower valuation than Netflix, despite having the cable networks, despite having the parks and entertainments business, the cruises, you're basically getting all of those assets plus this streaming business that I think could be bigger and more profitable than Netflix long term. And that's because Disney is putting assets together that create basically a bundle in streaming with Disney Plus, the proprietary content that they have there, Hulu, general entertainment, and a little bit more adult geared entertainment, and then also sports with ESPN over the top. So we are just starting to see the momentum of that. We're starting to see the distribution deals with cable networks, with telecom companies selling access to these bundles. And I think we're going to see that momentum continue. Prices are likely going to go up a little bit in the next couple of years. And then this advertising piece, don't sleep on that, being a major growth driver from a revenue perspective. And that would give Disney the ability to keep the entry price relatively low for a lot of these services, particularly on the sports side, because they're generating money from advertising, from gambling, and from other adjacent sources on the streaming platform. So Netflix has been the leader in streaming for over a decade. That is absolutely without question. But as we're sitting right now, they are not playing in sports. They don't have a big business in advertising. And I think as this industry grows, those are going to be two real keys to long-term growth and longevity. Disney is really well positioned in both of those. And I really like their positioning long-term, and especially considering the valuation for the stock. What do you think about Disney and its future in streaming? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you next time.